Hi, everyone, and welcome to a new episode of the VC React podcast. Every week, we bring you insights and reactions from top VCs, LPs, and angel investors reacting to the latest news on startups, VCs, and investment plans. Let's jump into it with our amazing guests for today. AlMajthoob, Managing Director at Middle East Venture Partners, MEVP. Issa Aghabi, Founder and Managing Director at Axis Bridge Ventures, and my co-host Jamie Lane from FWDstart. In the video description, you can find more details on our guests, their LinkedIn profiles, and links to their companies' websites. Our weekly news are brought to you by FWDstart, a twice-weekly newsletter that breaks down what's happening in the MENA startup, VC, and tech space. Today, we will talk about a massive funding surge in Egypt, Arabic AI, and believe it or not, space tech in Saudi. Before we start talking about the news of the week, I want to tell you about Octa, our new sponsor. Octa is an AI-powered workflow automation platform that helps modern businesses collect payments faster, smarter, and without the back and forth. If you're a founder or a finance leader, you know that managing receivables requires 14 hours plus every single week. It's chasing corrections, negotiating payment terms, updating invoice details, and constantly following up with your clients.
Octa automates the entire process, handling everything from invoice disputes to payment confirmations, so your team can focus on growth, not admin work. That's why more than 100 companies like Careem, Lean Technologies, and Algrim trust Octa to streamline accounts receivable. Check out Octa at weareocta.com. That's weareocta.com and experience the modern way to manage receivables.
Jamie, what do you want to start with today?
Yeah, let's start with Egypt then. And I suppose it's indicative of how busy last week was that we neglected to actually touch on Naui raising upwards of 70 million. But look, we'll get to them this week. And I suppose the Egyptian startup ecosystem generally, to your point, has seen a massive surge in investment. Like as of mid-May, it's 124 million across at least 6 major deals. And some of those funding amounts were undisclosed. So it's potentially higher than that. So it's a 406% increase year on year compared to May 24. And look, if you want to compare it to the month before April, it's an 8,000% jump as well, month over month, which saw a very kind of meager 1.5 million in funding as well. So look, it's a massive increase. And look, it might be interesting to touch on a couple of those deals just in sort of a quick whistle stop fashion, and then we can maybe touch on more broadly why we're seeing this, and then maybe go into one or two of the deals as well. And
what's happening in Egypt? Why all the surge? Why suddenly in May? Is there microeconomics or something else we're not aware of?
Listen, I don't know why these news tend to all come in bulk. It seems to happen. Maybe it's because it happened around the same time as Rise Up, like a week back. Usually people tend to bulk PR around that same time. But generally speaking, Egypt is a great market, but also a very, very challenging one. Like I've been looking at Egypt since 2006. Done many investments in Egypt, and it's a tough market if you don't understand it well, right? So taking a step back before I get into it, we've had success stories in Egypt, but generally speaking, not as much as you would hope for. From my personal investment perspective, I'm not talking about Egypt as a market. We had, when we were at IFC, one of the biggest success we had as a fund was Thawri. And that was like a home run. Although it listed at a few hundred million, $100 million in market cap, went to 2 billion at some point. But that's an example of big success. And we have a lot that have emerged over the past few years. The problem you see with Egypt, it's cyclical. There are cycles, as in any market, any venture market in the world. But in Egypt,
what drives those cycles?
It changes Thawra was one of them. The devaluation and the political instability. I would say macro, maybe political more so than anything else in the past few cycles. Okay. But these cycles happen a lot. And if you and anyone who wants to invest in emerging markets, Egypt specifically, you need to take that into consideration. Take consideration that currency risk is a big problem. And that's what us, most investors who invest in Egypt that are outside of Egypt that are dollar-based. Positive or negative, people shied away. But I would say what's happened, or my perspective, what's happened over the past period is there's been a lull, for the lack of a better word, for the past couple of years. driven by the devaluation and, the news that everyone knows about. I'm not going to get into that. And I would say, with that in mind, what's happened, there has been a shortage of capital allocated from Egypt from the regional investors, us included to a certain extent. People shied away. People looked at capital preservation. People looked at portfolio management and optimization and supporting the companies they did. And that went across the board. And then you take a look at locally over the past few years, you haven't seen much activity. There has been a few funds with capital. I would say Al Foundation raised a new fund. I'm not trying to do this. I'm just giving a few examples. I'm sure there's a lot more. And they focused on investing locally and making sure these companies survive. And what has that meant? The past couple of years, a lot of companies in Egypt have not been able to fundraise. So what did they do? Especially the good ones and the ones that you see in these in the PR, for example, the few that are in the PR, is they've focused on scale locally, expansion regionally, and globally to a certain extent. Just making sure fundamentally these are strong, solid businesses. And we've looked at a few of them here and there. They're not the stage that we invest in as asset creators, but we know enough. Their fundamentals have grown well. Devaluation aside, they've grown significantly on dollar basis and are now becoming, people are now going back and looking at Egypt as a viable market again, because things are stabilizing. But if you take a look at the trend that I'm seeing, is a lot of them are Egypt-based, Egypt-focused, but going abroad. So that's mitigating the risk, and a lot of people are now open to that, leap of faith, let's say, or taking that plunge back into Egypt. I'll throw in a few data points that I've gathered from my trip to Egypt last week. And this is the first time I've been in a year and a bit, so it's been some time. We do have.
I'm in Egypt today.
Yeah, great. See, there you go.
Going to Egypt next week.
Yeah, right. And one thing that I found very interesting is the local ecosystem in Egypt has also expanded the remit, not just focusing on Egypt itself, but using Egypt as a backbone or as a recipe or a blueprint rather for other markets in Africa that are comparable. More so North Africa, Morocco, Tunisia, although a small market, but you can really see trends in Egypt that have worked and how you can mimic that. And even the wider content, as opposed to focusing more on GCC. That may be driven by the fact that a lot of the funds in Egypt, LPs, are DFIs or international organizations like IFC or EBRD and so on and so forth. But that's also an interesting trend to note.
And to your point, Issa, some of the news today, we have Egyptian companies expanding east and some of them expanding west to Morocco. Ali, what do you think? What's happening in Egypt?
Yeah. I was just about to, talk about that. If you take a look at the press releases, Thndr talked about, their expansion to the UAE. They're looking at the Saudi market. The Saudi GCC market is very investor savvy. They have a large base of retail investors. There are other competitors as well. We're investors in a couple of these as well in Saudi and UAE. Number two, you have the likes of Haaland, which, acquired a company out of Turkey. Acquired another company out of UAE as well, so they're expanding. Even companies such as MoneyFellows is eyeing other markets as well. You have Naui, of course, looking into the Saudi market. There's a lot of Saudi money, GCC money, and then of course there's a lot of African money as well. Without a doubt, if you take a look at the MENA region, Egypt continues to house some of the top talent. Right? If you can make it in Egypt, you could make it in a lot of other markets. As Issa was mentioning, the Egyptian market is very, very tough. You got political instability. You got currency devaluation. You're fighting for talent. There's a lot of startups and especially a lot of companies have their back offices in Egypt as well, because it's a nice talent house, and you have a lot of companies based out of maybe Saudi, UAE, other regions that they have their back offices in Egypt. And then of course you also have the tough Egyptian consumer, right? These guys are sensitive to pricing. They're not tolerant if you don't provide them a very, very highly valuable product, whether it's e-commerce, quick commerce, whether it's auto, whether it's more real estate. So you have a lot of great talent. You have people that have the ability to expand, and within every single press release, you'll see that they have identified other markets. You have the case of the easy examples, the likes of Thndr, which they're looking at more tech, investor savvy markets like the GCC, maybe Haaland, which is looking at more emerging markets. That's where they're looking at Turkey. So, and then of course, Morocco also has a lot of similarities to the Egyptian market as well. And yes, I mean, most of these companies, it took them a little bit of time. I know that, they were ramping up for these fundraisers and for these rounds for quite some time, but they all managed to get it done and get it through, and to rebuild conviction and excitement back into the Egyptian ecosystem. Maybe it took a little bit of time, but yeah, we're finally seeing a lot of these great companies raising a lot of money, and it's quite exciting, definitely, what's going on over there.
Jamie, I see that you have 6 companies here to tell us about. Let's start with the first one.
Yeah, let's start with the first one. And look, I think an interesting thread that runs through 3 of the more significant deals as well is obviously the participation of DPI via the Include Fund as well. So that's just an interesting thing to note. I was speaking to Mohammed Aladdin a couple of weeks back, and I sort of, I was like, what's the deployment cadence going to be? And he's like, yeah, there's going to be one pretty soon. And I didn't expect it to be 3 such quick succession. But look, let's start with Naui. In any case, we'll start with the biggest by size. So they've raised, as I mentioned, a colossal Series A round. It's 52 million in equity. A whole host of participants here, led by Partech, based out of Paris, Vivian Capital, as I mentioned, DPI, VentureSouk, Sharouk, amongst others. And there's also a 23 million debt component as well, from a number of major Egyptian banks as well to support its growing mortgage offering. Naui now. CEO Mustafa has kind of been doing the podcast rounds the last week and a half. So there's been plenty of discussion. And I think one of the things that's cropped up in particular, I guess, is maybe the unlikely founding team in terms of the dynamic between them, and that some of them are related, they're cousins, and it's sort of a hodgepodge, but they've already meshed together and obviously bring fantastic qualities and characteristics to the table. But it is something interesting to note. But look, they're really developing, I suppose, into a kind of a full stack real estate ecosystem now. As I mentioned, you've mortgage financing, fractional ownership, asset management, B2B brokerage enablement as well. And I guess on a metrics perspective, that they've recorded over 1.4 billion in GMV, grown revenue 50x in USD terms as well. And as Ali alluded to a couple of moments ago, that the plan is now to expand across MENA, and I'd imagine the GCC in particular.
Can one player own the full stack in PropTech in Egypt, or do we still need some smaller players, each focusing on one single smaller problem?
Of course, I think obviously we're seeing definitely a wave of PropTech 1.0 is the real estate listing sites, the property finders, the Zillows, and now we're seeing a whole new wave of new PropTech, right? Whether it's rent now, pay later, whether it's
they're embedding finance and into their products. So
exactly right. Whether it's rent now, pay later, whether it's the crowd investment platforms for income generating platforms like Stake and others, whether it's AI and intelligence when it comes to real estate investing, whether it's fractional ownership as well. I mean, again, going back to the crowd investment, whether it's also digital mortgage brokerage platforms. Looking at the likes of Better.com or Loft out of the Latin America or North America. And then you have the likes of Holo, Hasbi, and Naui. And of course, real estate is definitely, if you take a look at any emerging market and you take a look at and you ask any regular retail consumer, what investments, what asset classes are they familiar with? Maybe real estate. At a bare minimum, they're aspiring to buy a home for themselves. This is the single biggest purchase for any individual, for any household. And I think we're obviously definitely finally seeing a whole wave of digitization within the real estate industry that has been for a very long time very resistant to adopting technology. And if you can, digitize the whole, supply chain or value chain, let's say, you'll be able to, grow. There's a lot of value to be had, right? Whether it's on the digital mortgage brokerage side, whether it's on, facilitating the transaction, whether it's financing, whether it's property management after that, whether it's fractional ownership. And obviously, even if you take a look at, Zillow 2.0, Zillow, released, I think something like that, like 10 years ago, a while back, they had a whole new strategy of 2.0 where they want to actually, evolve from just a listing site to capturing the whole value chain and how they can actually streamline the whole thing. Real estate agents are very resistant to technology adoption. They're very conservative when it comes to, their commissions and whatnot. And if you come up with a business model that takes a little bit of their money, so I think they're finally, let's say, cracking it in a lot of different ways. And of course, it's following suit, what we were seeing in other markets as well. Prop tech in the MENA region, but that's not just here. I think it's global phenomenon as well.
Makes sense. Issa, same question to you. Full stack versus small niche problems. Is Naui too ambitious?
Egypt has been a very tough market when it comes to prop tech, right? It has not succeeded in the past, right? I'm not saying not succeeded. It hasn't flourished as much as the UAE or Saudi and other markets we're seeing. If you take a look at in the past, people like Aqar, if you guys remember that.
Yeah.
People
we
like
invested in Aqar back in 2010 through N2V.
That was before the revolution.
Aqar, Property Finder, OLX, a lot of these platforms tried to figure out and conquer Egypt. No one did till now. So I think these guys seem to be onto something. It's a very complicated market. There is no proper mortgages in Egypt by law, if I'm not mistaken. So how do you create these solutions in a full stack fashion that adhere to what the market wants but don't have is an interesting one. The ultimate question, are they able to mimic that success in Saudi? Because Saudi is a completely different market. The whole expat versus local community, the buyer dynamics, the renting dynamics, it's just PropTech has been a hot sector over the past, let's say, 6 months. Between PropTech and AI and fintech, I think that's 80% of the new applications that we keep getting on a weekly basis. So I would say there is a story to be told about the full stack approach in Egypt because no one has cracked it. There's a lot of people doing small bits and bob and not scaling enough. But you do need capital. You need money. You need to scale. You need debt. There's a lot of that. The question is, can they continue on that trend and do they become that question in my mind when I look at this and the scale that they're gotten to, does this continue to be a tech startup or does this become more of a traditional PE play?
Makes sense. Ali, because you mentioned the 1.0, 2.0, what do you think 3.0 prop tech would look like?
Maybe AI, some tokenization. I don't know. Obviously there's certain trends, right, that people like to talk about. If you're talking about, let's say, fractional ownership when it comes to real estate, tokenization and blockchain, make it more liquid, make it more accessible, make it easier for ownership when it comes to, let's say, consumer investors or owners. We're definitely seeing AI, whether it's valuations, business intelligence, there's still, the MENA region, especially emerging markets, when it comes to access to financing, they remain to be under-financed, underbanked. So maybe we could see a bigger rollout, whether it's mortgage products or maybe it's, rent facilitation products. Probably all of the above. I don't know. I'll hear from you guys what you think about.
Self-driving cars. You buy a car and then it makes money for you while you're not using it. The same idea has been there in PropTech for a long time, but it's a hassle to manage. So maybe now we will have AI agents managing our real estate for us. So we don't. It's like.
Yeah, I would say like co-living, right? That's a big trend. You're seeing people doing some stuff in Saudi in that space, mixed use properties, so your office / recreation facilities, housing all in one place. There are, I think, new innovations when it comes to property and usage and optimization. And one thing to keep in mind, property ownership and globally has been on the decline. People can't afford to buy houses anymore. So how does that translate?
It's a disaster there.
US, Canada, Europe, you name it.
Well, let's move to everybody's favorite sector in the MENA region, fintech. Jamie?
Sure, let's chat fintech then. It was inevitable. So Thndr, Cairo-based investment platform, they've announced 15.7 million funding round led by Process. Again, their second announced investment regionally in sort of quick succession after leading the pre-series A for Zest Equity last week or the week before. Also see support from YC, Beko Capital, Endeavor Catalyst, etc. So this brings their total capital raised to just under $38 million. I think something particularly noteworthy about this is the way in which they announced it, which I suppose is quite uncommon in that they took a very Silicon Valley style approach in that they had a sort of product announcement day or keynote, which is pretty cool and uncommon. Like generally, for the most part, founders regionally do so very, very quietly, and you get like a press release and it trickles into the public consciousness, whereas they, packed an auditorium with 300 people, whether it be users, investors, people along the journey, and then like a big banner, I believe, at the back that was, the story is growing.
I love creating, that excitement around launching new products, announcing new deals. I love that. Yeah, why not?
Yeah, I think it's something cool to see. It's uncommon. I suppose a bit about Thndr as well. Founded back in 2020, as I mentioned. Obviously participated in YC, digital investment platform. Invest in your stocks, bonds, etc. Mobile based, low commission. You get the drill. As we touched on, regional expansion is on the cards. Both the UAE and Saudi sort of earmarked as core priority markets moving forward. And they've also secured a license in ADGM as well, which helps matters as far as the UAE is concerned. That's for sure.
Well, let me be here the devil's advocate. You both, Issa and Ali, you both mentioned that those Egyptian companies, they don't build only for Egypt now. They want to expand, some east, some west. But hey, Thndr is like Sarwa, Baraka, CFI, and the list goes on and on and on. There's a lot of these companies now. And every one of these companies is trying to dominate one country at least, if not 2 or 3. Can Thndr really expand and succeed in Saudi, UAE with all this competition?
Maybe I'll take a quick stab at it. I'm not an expert. I'm a big fan of this space. I used to be a trader. That's where I started my career. And I think me and you overlapped with some of the Mubashir stuff back in the day. Ahmad, it's a big space, right? It's a big space, very regulated space, difficult space. How do you create a platform that gives the masses, the retail investors, the ability to transact and do many different things? The ones you mentioned, I would say not. There are overlaps, right? As in a tech platform that allows you to invest. Is it AI driven? Is it a robo advisory? Is it whatever you want to call it? I think the market is big enough and the market is so inefficient and it's not accessible. So the question is, are these platforms allowing you to trade regionally? If so, you do need to be in each country and have the different regulations, the KYCs and whatnot, if I'm not mistaken, and the ability to access international markets. What you do with that technology, I think the jury's still out. Who will win? Is it what type of platform? But you're seeing a lot of success. Some of the names you mentioned are all doing great and they're growing, which means there is enough piece of the pie to be shared. With Thndr specifically, I met them in 2020. We wouldn't have our fund up and running. If we did, we may have actually invested in them, because I think it's the team, their tenacity, their hunger, the ability that they figured out trading in Egypt, which is a very difficult market. I think the jury's still out. Can they grow? I think they can. Will it be difficult? 100%. Regulation, getting it done. It'll be easier than Egypt, I believe, because it's a bit more mature of a market. But generally speaking, I'm a big fan of the space. We did one recently called Muwazana, which is market-making technologies for markets like Saudi and eventually others. I think there is a lot of inefficiencies in this market, and there's a lot of interest in the market that people want to do it, especially the fact that a lot of us don't have proper pension plans. I don't know about you guys. I don't have a good one. We try these different platforms, these structured products, and this is one of the big problems that these companies are trying to solve as well.
Of course, Thndr, great team, great product. And we're also investors from our end. We're definitely bullish when it comes to investment platforms, especially for the retail investor, right? We're investors in Awad out of Saudi, Sarwa out of UAE, Rain, which is for crypto, Stake for real estate. And across the board, we definitely do know that, if you take a look at AUMs per consumer in the GCC, higher than most regions across the globe. Number of retail investors in Saudi Arabia, I think it's reported around 6 to 7 million retail investors in Saudi, which is a very, very high penetration rate if you compare it to the European markets, or even American markets or Latin markets or African markets. And then, of course, if you take a look at each investment platform, they're trying to introduce different asset classes, type of investments, whether it's real estate, alternative investments, public equities. Of course, when it comes to fintech, the typical playbook is the unbundling, rebundling. Maybe you do one thing really, really well. And then, of course, you want to capture more value by offering more products and make it more sticky. And then eventually this can become, a full-fledged investment bank, if you will, or something else. To answer your question, what would the competitive landscape look like, 5 years from now? Is there room for all of them? Is there going to be some kind of consolidation? Maybe, I do not know. But what I can tell you is that the GCC market, especially, one of the best markets for these type of plays, right? Very high AUMs per consumer, very high transactions per consumer, very high LTVs per consumers, especially if you compare it to, India, other MENA markets, European markets. Again, one of the highest penetration rates as well.
Oh, I just think fintech is one of the biggest spaces we continue to see deal flow in, because our markets are so underserved, most emerging markets and globally, and just the traditional systems just stuck, right? Banking SMEs doesn't exist properly. It's just, so we will continue to see innovations in that space, trends, certain cases, fads, but I still think it is a big space to keep an eye out for. And it's like one of the few spaces that you would look at in the region that you can have a dedicated even fund focusing on, because there is enough pipeline as opposed to being generalists. But yeah.
I think the thing about fintech as well, I mean, if you take a look at the MENA market or any emerging market and you compare it to any mature market, developed market, you could clearly see how they are underbanked, underinsured, underfinanced. You could take a look at the, as per GDP, per, let's say annual revenues, as per, let's say the share of the financing for consumers or SMEs versus government. Across the board, you could see that there's very clear financial gaps or, financial services gaps across the board, whether it's on the investor side, right? And technology does, number one, it reduces all the OpEx cost, right? Think about a traditional bank, right? Traditional banks, you have to have relationship managers, you have to have manual processes, you're opening up branches everywhere. So it's only really feasible to serve, the large institutions, the governments, and especially the GCC, for example, or even other MENA markets. They're very, these guys crowd out the small retail or the small SME, right? If you take a look at, that's number one, OpEx. Number two, access to data. Now you have, we're shifting across the board from cash to cashless. Everything now is electronic. Everything is formalized. You have open banking, you have APIs, you have everything, ERPs, you have cloud-based ERPs. So everything when it comes to information is now become accessible, where in the past, it's only the large institutions that have audited financials and data, and that that allows the banks to operate. And then if you take a look at the cost of financing versus the profitability, right? Now you have tokenization, you have crowd investment platforms that make it now feasible even for the smaller players, or sorry, the smaller consumers, the smaller clients, to actually benefit from these. And suddenly alternative investments in real estate can be accessible where it wasn't in the past. Everyone said, oh, fintech, I think fintech is very clear when you take a look at how underbanked and underfinanced, and you compare it to any other, developed market. It's not, it's easier for the investor to see the opportunity.
That definitely explains why so many funds in the Middle East are focusing on fintech. So now we're moving into another story, classifieds with embedded finance now. Jamie?
Yeah, exactly. Ostensibly, we're moving on to automotive or mobility, but invariably, it's progressed to incorporate a fintech layer, as it seems every sort of vertical specific does. In time, every company becomes a fintech company, and that's certainly the case here. So, as you mentioned, Sylndr similarly raised 15.7 million, Series A, led by DPI, the aforementioned, via that Include fund. Algebra, Nawy, Right Ventures, built on. Look, there's a whole host there. They raised a colossal pre-seed back in 2022. I think it was potentially the biggest pre-seed in Africa at the time. It was about 12.6 million. I think it was, and it's really evolved since then. Like, it was very much a kind of used car marketplace, and now it's a much kind of broader mobility play. As I mentioned, like auto financing, servicing. I think they have a dealer marketplace now as well. Revenue's up 5x in USD terms since then. They raised a bit of a capital facility, about 7.5 million back in November of last year as well. It seems like for the time being, they're very much doubling down on Egypt. I don't think they mentioned, as far as I'm aware, a play for the broader region. So Egypt remains the focus for the time being for Sylndr.
General reactions, Issa, Ali?
Just like real estate, right? Vehicles are a very high purchase, and again, very underfinanced. I mean, we're investors. I mean, Sylndr also a great company. We're also investors in Invigo, which is kind of an alternative car financing company, subscribe to own. And again, if you take a look at, let's say, the Saudi market, our best estimate is that the number of vehicles that are actually purchased through financing is maybe around 70%. If you take a look at the US or Indian markets, it's between 80 to 90%. And I don't think that's due to, people save up more here. It's just, there's more accessible financing in more mature markets. And especially when it comes to used vehicles, right? So what we're seeing now, not just, now you have the ability to do proper valuations on these vehicles. It's digital. You could do maybe some credit checks. You could sell them through some financing as well. Again, just like other emerging markets sectors, you have sectors that are very traditional, fragmented. You have, if you want to sell your car, and especially in Saudi, Egypt, you go to what they call sharitiya. I don't know what they're called in English, but someone with a box of cash, and they look at the vehicle, and then they haggle you, and then they give you a price, and then they give you the box of cash, and that's how you sell the vehicle, right? And now you have, let's say, showrooms, and now some of these showrooms are now implementing, financing portals where you could actually apply for a financing for a used vehicle that has connected with the financing companies and the banks, let's say in Saudi or potentially now in Egypt as well. So again, right, I think two broad trends here. Number one, I think lack of financing. And now you have, once you streamline it, once you digitize it, you have better access to data. Maybe you could do better financing, alternative financing options. That's number one. And then number two, it's a fragmented, there's a lot of information asymmetry. There's a lot of integration. There's a lot of manual processes that once you digitize it, you can make it much more streamlined and better. And Sylndr is definitely one of the companies that are leading the way in Egypt.
It seems these models are working in the Middle East, but when I lived in the US, we had Shift.com, we had some other, like two others, and they all, I think, disappeared for some reason. And now it seems that Carvana is dominating now. But this model has been tried in the past 10 years in the US, and many of those players have disappeared so far. But I don't know, Sayara.com and
Sayara just played, with PFG.
So, it's a different market, right? I think emerging markets have different fundamentals in the US. Like, if you take a look at Latin America, that's a more comparable one. There's a few of them in Africa, in India. So I think this is like cards or classifieds 2.0 and how people are going about it. I did when I was before Access at IFC. I was in charge of that specific subsector globally, and we looked at it across the world. And you'd be surprised, the ones in the Middle East are the most efficient, both in terms of really milking the transaction and cross-selling different parts of the value chain. So not only that we're providing you the ability to buy and sell and authenticate and transact quickly, but cross-selling insurance, debt, you name it. And you'd see a lot of trends we see in the Middle East are these people selling locally, but also big export market. Specifically, I would say like the UAE, the likes of the UAE and the GCC, you see massive exports from this part of the world to Africa of like all Toyota Corolla cabs and this and that. So we're seeing a lot of the typical classified space being enhanced and improved, but also, as Ali mentioned, is the mobility 2.0 or 3.0 or whatever you want to call it, car ownership. Is that something we still need? Leasing. It doesn't exist in this part of the world. A big thing in the US and Europe, and also themes like with autonomous driving, using your car as you own it to generate revenues, like Airbnb, but for your. So there's a lot to be done and seen in the space, but yeah, I think it's a very interesting space. I think Egypt, again, one that has been a lot more offline and traditional when it comes to automotive and tech, but now people are realizing this ease of use and the comfort you get. My brother just bought one car from this Kavak. It's a Mexican startup, if I'm not mistaken, that launched in the UAE. It's very seamless, great process. I tried to value my car just for fun. Very efficient, man. The number of calls and WhatsApps I got that I had to tell them unsubscribe for them to sell my car was astronomical. But I think there is a lot to be done in that space.
Okay, let's keep moving. We still have a lot to cover.
Okay, MoneyFellows then. Egypt-based fintech raised $13 million, co-led by Almada Ventures. a DPI via the Include Fund again. These guys keep cropping up. We also saw Partech as well. We mentioned with Naui, Commerce Ventures, and other ventures too. So founded back in 2017, Ahmad digitizes traditional saving circles, Rosca, provides users across Africa accessible tools for saving, borrowing, investing, etc. New funding going to be used to expand into new markets, particularly, I suppose, like the kind of Maghreb region, North Africa, focus on Morocco, especially, and to grow the team. Look, I'll hand over to Ali. Ali, you're more familiar with this company than I am, and you can explain us a little bit more.
I mean, you pretty much summed it up. I mean, the beautiful thing about MoneyFellows, it is a financing product that is very, very native to emerging markets, right? You know, in the Arab world, they call it jam'iyat. You know, in South Asia, they call it, you know, chit funds. You know, if you take and across the region, actually, if you go to like the likes of GCC, like Saudi Arabia, Bahrain, Oman, especially, and then across North African region, you would find that a lot of the working class people, middle class people are very well familiar with, you know, Roscas. They're probably in a couple of Roscas at any given month. So to create a financial, you know, a platform, a digital platform that digitizes the whole thing, right? And what I mean by that, right? Number one, suddenly, you know, through technology, you could do credit assessments on all of these users, and you could come up, you know, you could make sure that the quality of these Roscas, you know, are very high. Number two, you could increase the amounts, right? Rather than, let's say, you know, small tickets, and you could only get, let's say, 5, 6 people, maybe you could get 10, maybe you could get 20 people, right? So the amounts that you could use through this financing program becomes much more bigger. And then number three, you could tie it, you know, through technology, you could tie it to major purchases, right? So think about schools, think about hospitals, think about travel, think about, these are things that already, right, consumers use Roscas for. And then what, okay, how about you know, connect with the schools? Okay, this is when the installments are due. And then you immediately actually subscribe to a Rosca that is linked to the school, and then everything is done seamlessly. And so this is, you know, an emerging market play. It is across the MENA region. As you highlighted, they're looking at East and Western expansion. And I think, you know, I mean, MoneyFellows is actually one of the companies that have been around for quite some time. And we invested back in 2022. And I think, you know, at that time when we looked at it, they were able to crack a lot of different things. They were able to, you know, create these infrastructure where they're able to credit check these guys. They're able to increase the amounts. They're able to create these, you know, business development connections. So I just love the company because it's a pure emerging market play, very native to their region. It's not a copycat. It's not a Silicon Valley company that you come in and you try to, you know, adapt to the region. It's you know, it's any consumer understands it. That's all.
Yeah, by the way, we have this concept of Jam'iyya in Jordan too.
Bahrain or Saudi, talk to any like teacher. Talk to any, you know, they're probably in a couple of jam'iyyas. Single mothers at home, they already have jam'iyyas within every neighborhood. I mean, it's native, yeah.
One question came to mind when I was browsing their website. It says that you can join multiple jam'iyyat or multiple cycles. How do you manage that, and how do you make sure that they're not overexposed to debt and they can actually pay to every one of those cycles? Or
yeah, so they do have some, you know.
It looks like, there is a complex operations behind the scenes.
So they do have, of course, I mean, they do some credit assessments, you know, maybe you could apply for one and then you could able to expand. So they're trying to make sure that these are done. And then they also do have, they have their own funds where they're able to actually fill in. Let's say, you know, you have a jam'iyya or a Rosca of 10 people, you reach 9, you need to close it. So MoneyFellows can come in and put in the last ticket.
That's smart.
They're able, so they also use these, you know, the financing to make sure that it's run smooth. And then let's say if someone doesn't pay, of course, you know, just like any other financing company, you know, if you're, the good thing as well, right? The Roscas are not, you know, like your typical lending companies where you have to raise a lot of debt, right? These are, you know, people are fueling the jam'iyya and then they're benefiting from it right back. So it's a different, so the amount of money that they need in order to fill in these gaps is very different than your typical financing company where you need to raise as much, and then as much debt you raise, that pretty much gives you the capacity that you could lend in. It's very different from that perspective.
I think there's a big social element to it. A lot of these Roscas are people you know, through your social demographic, neighbors, whatever it is. So there is that element as a safeguard.
But you could use that's also you're creating a digital community. Suddenly the neighborhood is just
I'm
it's not
talking
just
historically, right?
Yeah, of course. And that's
This means the network effect is big here. The more users there are, the more valuable this product is for every new user that comes in. Okay, so anything else on that, Jamie? Go ahead.
No, nothing else on that. I think it's AI time. I think Ahmed's. But I think we need to kick into gear on this. Yeah, so we have Tarjama, Dubai-based language solutions tech company, and now an Arabic AI company. They've raised $15 million in Series A, led by Global Ventures, so Wamda Capital, TA Ventures, Face Capital, Golden Gate, Endeavor Catalyst as well. So this brings total funding up to just in excess of 20 million in total. And this follows a $5 million round way back in 2019 as well, which was some time ago. And look, the company's been around a long time. It was founded back in 2008 by Noor Al Hassan. So they're really riding the crest of this AI wave, as it were. And look, they appear to have done a fantastic job to that end, from what I can see. So I suppose the core focus or the problem that they're solving is the gap that does exist, sort of in the global AI ecosystem, especially as it pertains to Arabic language processing. I think we're all aware of the dearth of lack of content that exists in Arabic in the first place from an online sort of training perspective. And look, most frontier models, obviously English first or China centric to a certain extent. They've built and trained their own proprietary Arabic LLM called Pronoia, I think I'm pronouncing that correctly, which it claims outperforms your ChatGPT 4.0 DeepSeek V3 on Arabic language tasks. So they have a sort of distinct or separate kind of platform, which they're calling Arabic.ai, sort of an agentic ecosystem. So the idea is to tackle real-world business problems, processed in Arabic at scale. So whether it be government, enterprise, variety of different regulated industries, already active in over 30 markets, company, processed more than 2 billion words, etc. Something interesting they note as well, actually, they are creating an AI academy to upskill enterprise and public sector leaders as well over the course of the next 18 months, which seems clever. Consistent, or they claim consistent, 20% compound growth.
By the way, the name Pronoia is the opposite of paranoia. I looked it up. And I wonder why, if it's an Arabic LLM, why did they call it an English name? I hope the founders can answer us in the comments section. But hey, I'll ask about the elephant in the room. Last week, we talked about G42, a multi-billion-dollar company trying to do something similar. And in Saudi, we have Humane, another multi-billion-dollar company trying to do something similar. I know that Arabic.ai or Tarjama is trying to be focused more on enterprise, and they have that on Arabic.ai, the website. It's focused only on enterprise. But we also have some international enterprise AI players like Writer, for example, which has founders from the MENA region, but it's an American company now. I don't know, it seems like a big challenge to tackle. Can you hear the birds? So, okay. Seems like a really big challenge to tackle with so much competition. I know AI is still in the early beginnings, but hey, it's a red ocean now. Can a company with only $25 million in funding in total compete with all that?
I don't have anything to, I can even delve into this deep sector or deep space or the red ocean. It will take forever, right? I think with this specific company, I think I'd like to commend, take a look at the entrepreneurs. This company, it's been around, right? They started off with doing typical translation platform business. Then at some point, if I'm not mistaken, Noor acquired the Lulu's startup, which was like a Fiverr type of platform to connect talent with creatives with demand. And she continued to build that. The fact that she's continued to pivot and figure things out and continue to grow, I think is a testament to a good entrepreneur that's been able to figure it out. It's been a while. It's taken time. They launched before VC was even, or tech startups was the thing in the Middle East, right? So I think that's something good to know. I think, can small startups conquer it? I think it depends on the type of startup and who's behind it. I think the bigger players will take a longer time and spend a lot more money, where more smaller, nimble startups can be able to do. With Tarjama specifically, the fact that they have a massive database of content is to their advantage. I don't know the details behind it, but if you're doing this for over 10 plus years, no, even more, right? And have a database of content that is relevant, and especially if you're translating, the right and wrong from English to Arabic and different Arabic dialects and whatnot, that is an advantage I would think they would have, and it makes sense that they're pivoting or getting into that space. Will they be successful? I think the jury's still out. There are so many competitors in this space. We've invested in one. Doesn't do the exact same thing. A lot of overlap. It's called Lisan. And again, we can claim to be more accurate than others in the market, not saying Tarjama and whatnot. But again, there's so many, and different people are tackling it in different angles. But yes, the Arabic language is complex. Why? Because we have many different dialects. And then you have a lot of mixing of Arabic and English together. Arabizi, let's call it. And then, how do you create a platform that understands that better than your typical Chat GPT or your Grok, your whatever? So I think the jury's still out. It's speed of execution and speed of growth. What I hope for is the G42s and the Humane and the so on and so forth realize that there are a lot of strong talent and strong platforms out there in the region, start buying them out, creating a healthy ecosystem and helping create the owner. That's a bet I would hope to take place. And actually, we talked about Egypt earlier. I did the prediction 3-4 years ago, and I'm saying there's going to be a lot of consolidation, a lot of acquisitions from the region into Egypt. Startups never happened. But I would assume and hope with AI, you will see that as well. Agents, content, LLMs, you name it. That's a bit of some of my thoughts on that.
Arabic.ai on the website. It's not only about translation. It's about everything, enterprise AI services, right?
Mm-hmm.
And we have Humane, G42, and even Brighter, and a lot of others are trying to do the same. So what do you think? Do they, as Issa mentioned, can smaller companies, because they're smaller, they can move faster? Can they win?
Yeah. I mean, I guess, maybe, a lot of people like to think about AI, right? As, you have your foundation models, you have your middle software, and then you have your applications, right? You have your applied AI. On the foundation models, right, I think most people would tell you that it'll be dominated by these multi-billion-dollar companies, the Googles, Alibabas, OpenAI, maybe Humane, G42. And then you have, let's say, the middle layers, right, whether it's fine-tuned, very sector-focused, application-focused LLMs. These are up to, let's say, maybe the foundational companies, whether they want to develop in-house, whether they want to acquire. I think going back to Issa, maybe we see more, some AI, some more M&A between, let's say, the foundation models, the large multi-billion-dollar companies, and those that are doing fine-tuning, LLMs for different sectors, for different applications, whether it's the Arabic language, sector-focused, or whatever. And then you have, let's say, the applied AI section, right? And, we're seeing applications, whether it's a voice agent, whether it's BPOs, whether it's financial services, whether it's business process automation. I think, in every layer, maybe you take a look at it differently, right? So on the middle layer, I think there's going to be, we're going to see some VC investments. We're going to see, the likes of Tarjama and Lisan AI and others within that spectrum. Maybe we're going to see some M&A as well. I know that Humane and G42 are very active on both sides, whether it's developing their own products or M&A. And then you have the applied AI models. On the applied AI models, I mean, this is your more typical, generalist VC, looking at traction, development, or how fast are they, how short are the sales cycles, LTV, CAC, all that stuff. But I don't know. I mean, AI, VCs, they always like to think about, okay, what's the foundation now? What's the technological foundation for the next 10 years of innovation, right? For some time, they were thinking about IoT and then Web3 and now AI. So obviously AI will be the catapult or the catalyst for the next 10 years of innovation. And how would which ones are going to be, let's say, thinking back of the internet days, right? Which ones are going to be the pets.com or Webvan versus the PayPals and eBays and Amazons, right? It's exciting times.
And to add to that, Ali, almost all the companies we talked about today are business model innovations, but this one is technology. So they're creating their own technology. I'm excited to see VCs in the region investing in pure technology companies, pure technology plays, and they're building their own LLM. So this is big. I'm happy to see that. Anyway, speaking
I mean,
about
if you talk to
technology,
them,
yeah.
If you talk to them, they'd always tell you, look, we understand the dynamics. We can work with OpenAI, we could work with Alibaba, we could work with DeepSeek. They're also very nimble. If you talk to most of them, they understand that it's not like they have a very concrete, stagnant business model. And these are the founders that you want to invest in for sure, as Issa mentioned.
Okay, speaking of technology and smaller companies in big spaces, let's go to Space Tech in Saudi. Jamie?
A nice pun, Ahmad. Spaces, very good. Very, very good. SARsatX, and look, I won't spend too long on this because I'm going to defer to Issa and he can tell us a small bit more. Saudi-based deep tech, space tech startup specializing in SAR, which is an acronym for Synthetic Aperture Radar. This maybe probably a small bit of context on exactly what that is. They've raised a 2.6 million seed round led by Autonomous, the digital arm of NEOM. So Wade Ventures, obviously Aramco's VC arm, Access Bridge Ventures, yours truly is with us, and Coast Innovation Ventures as well. And previously, we actually had Ahmad from Flat Six Labs last week who backed the pre-seed as well. So it founded a spin-off from the Takatkah accelerator incubated at Coast, essentially designs, builds small satellites equipped with SAR technology for EO, which is Earth observation. So high resolution imagery, day or night, even through cloud cover. So invaluable in terms of like real-time monitoring of sectors, like I think they name check on the website, deforestation, oil spills, disaster response, border security, all that kind of things. And they promised to deliver that, I think, data within 4 hours. So in terms of, I suppose, making fast decision making, it enables that. It's a competitive market globally, but I think very much regionally, I suppose, sovereignty kind of seems to be the play. Like you have ICI in the Finland, I think, do it. You've Capella Space in the US, and both of those have raised a lot of cash, but regionally we don't have a player in this space at all. So look, we're keen to get your perspective, Issa, in terms of, it's not the kind of company generally that we see in an early stage regional VC portfolio. It's like technical, it's super capital intensive, takes a shit ton of time.
It came out of a research from Coast. So that's amazing.
What gave you the conviction?
Well, I'll tell you one thing. I'm not the best person to ask. You should need to ask my partner who led the deal. But I know enough to give you some insights and the listeners some scoop of how we came up across this. So I've been always interested in this space, right? I think who hasn't, right? Who doesn't? And my first exposure was a company called Planet out of India that we invested. I was not part of that deal, but the team in IFC, my colleagues, did that. And it's always been fascinating on the fact that you can send satellite to space and you can make a business out of it, right? And come back here to the region, it's a space we always, we've never got a deal flow in. And, as you read and educate yourself about the space, and it's always been an interest of ours. And one of our partners, Ahmad, turns out, who has invested personally in 2 to 3 companies in this space. I'm just building the storyline. So he knows the space well. And then we met an advisor who was looking at a few things in the Middle East, who is a space guru. And we started learning a bit more about the space. And then I'm not going to name another investor in this round, who comes from a global VC that is invested in one of the top winners globally in this space. So I think serendipity, right? Everything fell into place and we came across SARsat. One of my colleagues was at one of these events, learned about it, we talked to them, and we built that conviction. Fundamentally, these are a bunch of engineers, very smart geeks who love this space. And what got us excited is the sovereignty element of what you think. So what made this happen for us is, as the Ukraine-Russia conflict, as the Palestinian-Israeli stuff taking place, we noticed there was a lack of supply of satellite time for this part of the world. And I think the UAE has a bit more advanced than Saudi in the past years, where there has been a lot more done in that space, and the Saudi is coming up. So there was a big element of that. That's why don't we have that services or these facilities here? And there's 2 parts of it. I think there's the easy commercial part of it, which is the imaging. So you take images, you sell them, and you give people the ability to cut costs out. So for example, with NEOM, construction. How many fleets of cars and humans do you need to go check on construction progress? Reservations, dumping of waste and sewage, banks and vegetation, right? It's a big thing in Africa, in Latin America, where banking funds farms by making sure how proper the crop yield. With a picture, AI and the technology they've developed, you're able to do that within minutes, hours, as opposed to sending a whole field. So that business in itself I think the guys have perfected and done a very good job relying on external global sources and providers that have the region covered. So I think that's one aspect of what the guys do, and we were very impressed on the platform that they developed to serve the business community, let's say, as a whole. That's the B2B element of it. The other aspect which you're talking about, actually launching satellites to space to cover the region better. Because it's funny, he was here yesterday because I'm in our office in Riyadh, and he was showing the world and how satellites orbit and how you have certain windows and for this part of the world, and can you get those windows and can you buy them? There's not much being done for this part of the world, and this is a very expensive endeavor. Just I think launching a satellite will cost you $8 to $10 million. Other than the facilities you need to have on the ground to be able to service them. And I'm not a technical guy, and I'll revert to my partners who know a lot more on that space. And the beauty of being in this part of the world, and this being a sovereign thing that people want to protect, there is a lot of facilities and a lot of government support to be able to do that. There are incentives, there are grants, this company will require to raise more money down the line to be able to launch into space and need a lot of money, but you can subsidize a bit of that with the government support and the localization and the protections.
So what's their current status? Because my understanding is they raised $800K first, and then now $2.8 million. So, and you mentioned you need millions of dollars to launch anything into space. So what's their current status? Did they build those SARs themselves yet? Or?
So I think a lot of what's been done is to leverage global infrastructure for local needs from a B2B perspective, while developing and building their own proprietary technologies and ability to launch satellites. To launch satellites are different. So I think probably in the next year or so, they'll probably go out to market and raise the larger round to be able to go out to market. But again, to be able to do it out of Saudi, there are certain regulations, there are certain level of approvals you need to get. You need to build that trust. Are you credible? There's a lot that needs to be done from a regulatory and legal perspective to be able to get there. But if you ask me, the guys,
I love this marriage between those engineers and geeks and the business people who are trying to make money today while they're developing their own innovation. They're trying to sell B2B using the
and
global
I would say,
infrastructure.
fortunately for the guys, you see a lot of the names on the. So I think we're the only, typical VC on the cap table. Everyone else is either it be R&D or sovereigns backed owned entity. So it shows you, I don't think you will find that anywhere else in the Middle East but Saudi right now, where you can have that backing and that support to create innovative platforms like this. You will see others that pop up in the future, as one would expect. But I think they're on the forefront. And then you talk about the global competitive landscape, Jamie, there's a lot. There's a lot. But no one is focusing on this part of the world. And if they do, are they able to do it solo? How long will it take for them to get the regulation? Are there any risks with that? Do they do it with a partnership with someone like Startup? There's a lot of questions that need to be answered. But we're very excited about this space. This is, I would say, one of the outliers we've invested in. It's not a core sector for us. I don't think it's a core sector for anyone really in the Middle East. But we built that conviction over the past 6 months. This took a lot longer to transact for us than any ideal deal in the fund, because we had to learn, educate, understand, and that took some time. Unfortunately for them, they have a proper B2B play to be able to sustain their business, right, while the round gets going.
How do you think about it from a time horizon perspective, Issa? How does that kind of fit into the fund strategy? Obviously, it's
long-term investment.
It's a good. I think. So they've been up and running for some time. So we've saved some time and shortcutted. I think if you look at them at two separate businesses, one was long-term, actually satellites to space. The B2B one is more short-term. let's see how that pans out. I think with us as a fund, we still have another 6 years to go. So I think hopefully within the next 6 years, we'll have something come out of it. But also, if this becomes a competitive space and a lot of people want to enter this space, there could be roll-ups from international players who want to open up here, or sovereigns buyouts of some sort. There's so many venues, but this is a higher risk investment because of the sector that they're in and the longevity that you mentioned.
I think
Go ahead, sorry.
Yeah, I think there are two things I think to keep in mind as well, right? Number one, the national initiatives by, especially the government in Saudi and UAE. This would probably, kind of like push space tech in the region. And then number two, the accessibility of satellites. Right now, students actually at home, students in their schools have workshops where they could create their own satellites. So rocket science isn't as difficult as it used to be, right? In the past, it's actually more accessible. It's taught in schools. There's a lot of workshops. There's a lot of companies that do designing and development of satellites in schools across the region. And then, of course, supplemented by the government initiatives. I think maybe space tech in the next couple of years would be very different than what it is today.
So in Saudi Arabia and the UAE, we're seeing pushes into AI, space tech, and we've seen others in biotech and healthcare and some other niche markets. Is it smarter for new VCs who are thinking about raising their own VC funds now to specialize in one sector? Like we saw last week, we saw Wild, which is a specifically AI fund. Is it smarter to be specialized in one sector or spread their bets across different industries, different verticals, like usual?
I think the pool is still not big enough to specialize in many different areas. I think being generalist with certain thematic focuses based on what you know and what you do and what you understand, which is what we claim to do. But we ended up doing a space tech one because we have someone who's experienced in that space. I think there is a story there. I think there are certain sectors that can dictate a fund, dedicated fund. We've seen like the likes of venture suku focus on fintech. Now with this AI, I think there's a case to be done if you have those expertise and understanding of that space very well, because it makes you better investor and very value-add support and more focused. But I still believe the market is more generalist right now, personally. And if you ask me, maybe a bit of a controversial point here, I think there's too many VCs right now chasing limited deal. The pipeline is increasing. I think there's so many. There has been 30 or 40 that has been created over the past 5-6 years. Nothing against anyone. We like to work with everyone. Let me put that out there, the diplomatic part of it. But I think there is, as I predicted a few years ago, people consolidating and people rolling up alongside other, taking different people with different skill sets and putting together. I would love to see that in VC. But generally speaking, time will tell how the market matures. But my answer is that I think generalists with thematic focuses that are not just one subsector is what works
in here. Yeah.
I would say, if anything, people focusing on certain stages is more important. Like a dedicated, there is a case to be made that people can do from pre-seed to Series B and following on throughout. But there is certain buckets that need special skill set. Because most of my career has been early stage and seed, but I did a stint of 5-6 years doing growth capital and fund investing. It's a completely different skill set. I had to learn it all over again, the way you analyze it. So I think that for me is a more important topic as opposed to the sector or your focus right now.
Yeah, I mean, about the generalist versus specialist. Yeah, I think most VCs here would tell you maybe generalist is still a generalist market. There's also like contradicting data, whether generalist funds outperform specialist funds. I don't know. And then, about Issa's comment about maybe there are a lot of VCs now. Yeah, I mean, ultimately this would, obviously this, if that is definitely the case, that means you'll have a lot of VCs that unfortunately would underperform. It's going to be a competitive market. We got to be on your toes. And if you underperform, then it's going to be very difficult to, actually, fundraise for the second and third and fourth fund. So, yeah, I mean, of course, not fun in the sense that maybe the security is not as there, but it's going to be, it's getting much more competitive. And ultimately, it's the top performing VCs that will always continue to, raise more funds and outlast those. And if you don't perform, 1x distribution to paid in capital might not cut it out anymore. Yeah. So, yeah, it's ultimately good for the industry.
So I was going to say to this point that there's like a data point, I think it's a preview of Eden Rabbi's Clear World report, I think for early stage 2025 as well, which does actually support your hypothesis that we have. I think 2024 was an inflection point where there are now more VCs than there is actual, sort of deal flow to support that number of VCs for the first time. So I might link to that in the description as well.
Great. We wish the best of luck for all the VCs, especially the first-time VCs and all the startups. Before we wrap up, a big thanks to Octa for sponsoring today's episode.
Yeah, if you want to get paid faster, access financing, and automate your receivable process, head to weareocta.com. That is weareocta.com, and take control of your accounts receivable today.
With that, thank you so much, Ali and Issa. You've been very generous with your time today. We would love to see you again soon.